What if the money you work so hard to earn could work just as hard for you even while you sleep? That's the idea that draws many people to Forex trading. But before you dive in, it's important to know exactly what you're getting into. Forex, short for foreign exchange, is one of the biggest financial markets in the world. Trillions of dollars move through it every single day. It's open 24 hours a day, 5 days a week, and people from all over the globe take part in it. Sounds exciting, right? But this is not something you just jump into without understanding how it works. Forex trading means buying one currency and selling another at the same time. Currencies always move in pairs, like the euro and the US dollar. If you think one currency will get stronger compared to the other, you can trade that pair and try to make a profit. It might seem simple at first, but there's a lot more going on beneath the surface. The price of a currency can change for many reasons, like interest rates, news, politics, and even natural disasters. If you're not careful or don't understand these changes, you can lose money very fast. Many beginners make the mistake of thinking Forex is a guaranteed way to get rich quickly. The truth is, trading takes time, patience, and knowledge. You have to learn how to read charts, understand trends, and manage your risk. Without these tools, you're just guessing, and guessing in Forex usually ends in loss. That's why one of the most important things to do before starting is to learn the basics and practice with a demo account. A demo lets you trade using virtual money, so you can get used to the platform and how trades actually work without putting your real money at risk. Another key thing you must know is how leverage works. In Forex, leverage lets you control a larger trade amount with a smaller deposit. For example, with leverage of 1 to 100, you can control $10,000 with just $100 of your own money. It sounds like a great deal, but it also means your losses can be just as big. Leverage is a double-edged sword. It can help you make more, but it can also wipe out your account if you're not careful. That's why smart traders always use something called a stop loss, setting that closes a trade automatically if it hits a certain level of loss. It's like having a safety net to protect your money. Choosing the right broker is also a big step. A good Forex broker will give you access to the market, tools to help you trade, and fair conditions. Innohedge Limited, for example, focuses on providing a safe and transparent trading environment. We don't promise profits or make wild claims. Instead, we aim to give traders, especially beginners, the support and tools they need to grow their skills over time. Whether you're just starting or looking to improve, being with the right broker makes a huge difference. Emotions also play a huge part in Forex trading. When people see prices going up and down quickly, it's easy to panic or get greedy. But trading with emotions almost always leads to bad choices. Successful traders follow a plan, stay calm, and stick to their strategy even when things don't go their way. That's why creating a simple trading plan before you start is a smart move. Keeps you focused and helps you avoid impulsive decisions. In the end, Forex trading isn't about being lucky. It's about learning the system, practicing your skills, and managing your risks. It's okay to start small and grow slowly. In fact, that's the best way to build experience and confidence. So if you're thinking about trading Forex, remember this. The more you know before you start, the better your chances of success. Let your knowledge be your strongest tool and never stop learning.